Where are gold prices headed? Current news is that gold prices are holding steady on Tuesday, a day after a sharp decline thanks to that tech-led sell-off. Spot gold was about $2,742 per ounce, having fallen over 1% on Monday, marking its steepest drop since December 18th. Investors had rushed to liquidate bullion to offset losses triggered by that pullback in technology stocks, spurred by DeepSeek's low-cost, low-power AI model, according to Reuters. So investors are now looking at the Federal Reserve's first meeting this year, scheduled to start later on Tuesday. Meanwhile, what are the forces of demand and supply at work in determining gold prices across the world right now? So I reached out to Praveen Singh, Senior Fundamental Research Analyst and for Commodities and Currencies at Mirae Asset Sharekhan, and I asked him to take us through the various global factors that were driving gold prices now, and obviously that includes Trump's role in it.
Yeah, thanks a lot, Mr. Govind. Thanks a lot for having me. Yeah, definitely there's a lot of volatility and a lot of cross currents, a lot of views and news pertain gold prices. At the same time, people are having different notions about where could possibly gold prices go, especially in the wake of Mr. Trump's election as president. Overall, the way I see the things, it goes like this. In January, gold has risen very sharply. It is up approximately 5% this year. That is despite the fact that actually US yields are somewhat elevated and dollar is mostly flat. So what we are seeing clearly in gold is January impact. That is because of the fund flows and expectations of the fund managers regarding the performance of gold in the remaining part of the year. Now, as Mr. Trump threatens major economies with tariffs, he is trying to be focused on growth, and at the same time, he is pursuing his deportation agenda. So these things are definitely going to have impact not only on gold market, but as such on other financial markets as well. Tariff, I don't think that tariff would actually be inflationary. Impact of tariff would be in some other terms. It is going to have a negative impact on global trade. So that will be positive. However, his deportation drive, that would be inflationary because of upward pressure on wage. But at the same time, it is going to constrain the level market. So yields can go up. That would be pushing dollar index upward. And as risk sentiments remain strong and Mr. Trump is focused on growth, so there would be actually increase in borrowings. Borrowings rise, that again would be pushing the yields higher, at least in near term, more so because the job market is strong. The Federal Reserve currently focused on containing inflationary pressure. So it is likely to maintain its hawkish stance. As the dollar index rises because of a rise in yields and because of the risk aversion, initially we can see some correction in gold prices from the current level. But overall, the same thing is likely to become positive for gold going forward because the fundamental drivers for gold remain very well in place, like concerns about the global debt, concerns about US debt, fiscal situation in leading economies. And if I talk about the interest rate payment to be done by the US, that is approaching $1 trillion, a debt to GDP ratio is 100%, and it is likely to rise 120% in a decade or so. So the fiscal scenario doesn't look good. So that is actually a huge concern for investors as well as for institutions also. So that will be supportive for gold. And it is a situation not only in the US, it is being seen elsewhere also, like what happened in case of UK because of borrowing concerns. The cost actually shot up and fell to more than a year low. So more or less the same thing happened in France also. So we are seeing that bond vigilance, they are becoming active and there could be a re-rating of sovereign bonds. So in that case, initially gold may go down because of higher yields. But as we know that gold now it does not respond much to its traditional drivers like yields and dollars because borrowing is huge. So the market is saying that if you want to borrow, you'll have to pay me higher cost. And it means that earlier, the kind of impact that we were seeing on gold prices due to drivers like gold and yields. That is not happening anymore. Then we have got big concerns coming from Chinese economy. Like we saw yesterday only that PMI manufacturing has took back into contraction zone, and property market is still struggling. So that is yet another thoughts of gold buying. And then central banks, they would continue to basically buy gold to hedge against economic uncertainty as well as to reduce the dependence on the US dollar index. So we have seen very strong central bank buying in the last 3 years, and the trend is more or less going to continue in 2025 also. That is one of the most important sources or gold prices, which is actually leading to buoyancy in gold. And then apart, see the part is that the last 4 years we have seen ETF outflows. So the investment demand as such is not strong. I think it is going to be revived because of the fact that now the markets are increasingly worried about the fiscal situation, including economies like US. Like if I talk about 2020, I think there the investment in that year the investment demand was around 1795 tons, and the ETF inflow was around 900 tons, I guess. And in the last 4 years, the inflows have been negative. So even if there is somewhat slack left by somewhat reduced central bank buying, we are likely to see investment demand picking up that slack. And in fact, if I just to the tune of what we had seen in 2020, it would be extremely bullish for gold prices. So overall, in short, because of Mr. Trump and his policy, because of risk aversion, higher yields, and dollar index, gold prices may go down. But if that happens, so that would be a very good buying opportunity.
Right. Thank you so much for joining us.
My pleasure. Thanks a lot for having me.